Boomers are dumping $900 billion, and you're watching the wrong thing. Everyone's waiting for 21 million boomer homes to crash the housing market. While I think that's cute, they're not selling their houses. They're selling their businesses that paid for those houses. $900 billion of Main Street cash flow is quietly for sale, and almost nobody under 40 is paying attention.
I do agree with that. I mean, I think the one person that's paying attention to it.
You agree with it. I say big brain stuff. You agree. This is easy. This is how we do it.
Well, like the one person that's trying to educate people on this is Cody Sanchez, who's buying businesses. And I think she started in like mobile home parks and, sort of business, maybe like
laundromats.
Laundromats, business type real estate.
She's talking about just businesses. We're talking about businesses that are attached to real estate. So I think a lot of people, are consumed with the idea that these 21 million boomer homes are going to crash the market, that they're billions of dollars, these assets being transferred. But a lot of the wealth is actually tied up in the commercial real estate that these boomers own. It's not just their homes, it's not just their primary residences, and it's not just their businesses. A lot of the boomer generation, they own businesses, but they also own the real estate. And that's what's interesting
I was just talking to a buddy of mine the other day, and he's a friend in town, and he owns I won't get into details, but like he basically owns a local business, and he was talking about selling it. And the real estate, he owns the real estate as well. And I'm like, well, would you sell the real estate with it? Well, yeah, I'd sell the real estate with it. They're not really, but he's in that mindset where he's like, well, it's not really worth much because it's kind of attached to the business, but the business doesn't spin off a ton of capital. So it's like, I'm not really sure what it's worth. Like, it's interesting because it does seem like when the business is married to the real estate, there's this weird, it's not as liquid. It's not as marketable. It's this weird space in the marketplace versus like a single family home. They're like, what the neighbor's home sell for, right? Oh, it sold for $900,000. Therefore my home's basically worth that. Even a commercial asset like a RV park or a mobile home park, it's like, well, we can look at that and we can use the comparable model via cap rates, via the income model, and say, okay, what if things in the area sell for sold for a 7 cap? Okay, this is going to be close to a 7 cap. That's going to get you close. But then you get like a pizza shop, and you're like, he's hawking pizzas out of this thing. They own the building, the SDE or seller discretionary earnings or however this thing's valued. It gets into this weird gray space where I think people are making deals. We know a guy in Portland making deals like this.
Well, it's almost an afterthought too for these sellers because Mitch, we've looked at roofing businesses, we've looked at other things, and the real estate that's owned is almost kind of an afterthought. They're so focused on the business. They bought the real estate maybe a long time ago, and they're just like, my business is worth this much, but I'm spinning off this much SDE. This is the multiple. This is what my business is worth. Oh, and by the way, there's this like real estate thing over here.
Yeah, and that's going to be included.
Right. And it allows you to get really flexible with these sellers and put together really creative financing structures. Gabe, I'll explain what creative financing is to you later. But basically that we've looked at this and we're like, they're so focused on the business value that the real estate's kind of just thrown in, which is like a huge value add for a buyer.
I think they need to be looked at differently. So you remember like commercial property, we're looking at NOI. Let's leave mobile home parks and RV parks, and let's for the sake of this conversation call anything commercial something that has a business in it. I know we've said on 100 episodes commercial is 5 unit club, including apartments, multifamily, mobile home parks. But for this conversation, let's talk commercial property, meaning like there's actually a business in the property.
It's a warehouse, it's a shop, it's a retail space, it's something like that. Yeah.
Industrial facility, yeah.
So something like that. For the sake of this conversation, the value of that commercial property is still based on NOI. And that NOI is still going to be based on the rent they're paying and your expenses, right? And so what's interesting and what I've seen a lot in the commercial space is you see these seller leasebacks. So the property owner and the business that's in that property has been a successful business for many, many years. But unlike us, where we use real estate, we want real estate on our balance sheet, even if it's, owned with debt, because we use debt so that, so we can use leverage to buy the real estate. A lot of these businesses don't want that. So to your point, Travis, is real estate being an afterthought? Yes, because the best use of their time, energy, and money is to go produce whatever their business is producing. So I actually see this in the commercial space a lot, where the owner of the building will actually sometimes they'll sell the business and then sell the real estate afterwards. Sometimes they keep the business running. They'll actually sign a new lease with themselves and then sell the property based on the NOI. And that's how they recapitalize.
I don't understand that though. I don't understand that because I mean, if I was to give anybody advice, if maybe they're a smaller, I mean, maybe it's the difference between institutional businesses, larger businesses versus mom and pop businesses. Because Gabe, you've mentioned that where you've got these massive tenants in your triple net industrial, and the real estate's really just sort of a hassle for them. They're really focused on making the widgets or doing whatever it is they're doing, and they might want to recapitalize to then reinvest in new machinery or new marketing. So they sell the building to recapitalize. Where if I was giving advice, maybe this has changed, and maybe you guys disagree, but if I'm giving,
say on the real estate.
yeah, if I'm giving advice to maybe someone that's building a mom and pop or a small business owner, I'd say build a business, buy real estate with the business cash flow, right? Because you can get SBA financing, you can get some really cool financing, but then hold the building in your retirement, sell the business, and then rent your building back to the buyer.
But they're playing two games, and most people want to play one game. When you're making 20-30% on your money via this business, it's a higher risk business than real estate. And then you look at real estate and you go, oh, I can make 7%. Your brain immediately goes, I'm going to sell the 7% and make 20%, even though it's a different risk profile via a business. We know that. So I think that it's just like numbers. They're looking at going, look, this thing's dead this thing's dead. I don't want to own it. I want to just recapitalize and throw it into something higher margin.
No, it's 100% what it is. Like, I'll break it down in the most simplest terms. Like, we invest in real estate to build and maintain wealth and to receive cash flow. Other people are building businesses to create wealth and receive cash flow. One of my tenants is the largest labeling packaging manufacturer in the world. They do $5.7 billion a year in revenue, and they have 300 locations. If they tied up their money in those 300 locations, they wouldn't have the liquidity to go produce. Their best use of time, energy, and money is to produce more doodads, produce more labeling and packaging, whatever the hell that they're making. Like, if they tied up their liquidity in 300 locations, they then wouldn't have the money to go produce more of what they're good at.
Which makes sense for larger businesses, but mom and pop, so I'm retiring, I could hold the asset and then just collect an annuity stream from the new buyer of the business.
I do understand what you're saying. I think that that's a smart way to play, but I don't think that's the way people are thinking about it, because the average business cash flow kicks the average real estate cash flow's ass any day of the week. Now, what comes with that is way more risk, people problems, all kinds of shit that, no passive life or lifestyle design usually, because you're usually working in the business. So way more, but I don't think people are looking at those things when they make those decisions. I think they go, look, if I make this investment and buy this equipment or whatever that is, I can make more widgets, or I can serve more people in some way. Or I can buy another truck, if I'm a roofing company, or more equipment, and therefore I'll get a return. I feel like that's the focus. And if you think about it, like, most people don't understand cap rates. They don't understand real estate. They don't understand what that even means. And so it's just a multiple. So they're looking to maximize. I do understand what you're saying though, Travis. Like, you look at like the McDonald's thing. It was like, hey, let's sell burgers to buy real estate. Like, that was a beautiful model, and that they built it into this beautiful, amazing company.
But I sort of think through that mentality because I'm a real estate owner, right? So when I'm thinking about buying a business that has real estate attached to it, I could maybe get in more creatively. Maybe you assign less value to more value to the building, less value to the business, but you get the asset because the building's undervalued or whatever. But I'm just a real estate investor, so I look at business. I like the holistic approach, but you're right. A lot of people don't think about the real estate's an afterthought.
If you like what you're hearing so far and you are not making at least $120,000 a year with cash flow real estate, or have millions of dollars in equity, come check out our 0 to 100 elite community. The link is below. Check it out.
I listened to this guy talking through this, and I don't know, I can't remember the numbers, but it was completely out of control. This guy buys this business. He goes in basically with no money. Okay. And I'll make this story short, but basically raises the money for a $15 million business and real estate. I can't remember what it was. It was like manufacturing or something. Raises like $3 or $4 million, goes in an owner's contract, does a lease back to himself because he buys the real estate as well, sells the real estate for like $16 or $17 million. He has the $10 or $12 million business completely paid off and free at this point because he sold the real estate. And now he returns his investors' money and then grows the business for like 2 years and sells the business for 20 million. Now, you see what I'm saying? So because the seller did not assign the right value to the real estate, and he did, and assigned a sale lease back, he was able to do basically a massive arbitrage move and give all investors a massive return. I think that there's all kinds of ways and structures to do this, but looking for sellers of businesses that have attached real estate, I think can be a good start.
Well, I think that's the point. There's also a life cycle to this. I mean, we're all buyers of real estate, but there's time that we sell. I have a commercial property where one of the tenants is the oldest construction company in the city. Well, they built that property in the 90s. All right. So before they sold the property to me, they signed a 5-year lease with themselves. But they built that in the 90s. They happen to be a commercial construction company. So they built that at cost in the 90s. And I bought that property from them in 2023. So by 2023, right, they probably owe little, if not nothing, probably owe nothing on the property, but they're still in business. They're still a company. So this is a way for them to recapitalize and to still occupy the building. So it's just kind of the life cycle of the business and the life cycle of the real estate, right? And I don't think it's uncommon. And then I think where the opportunity is, and the whole point of this episode is that we think of this wealth transfer as these, these boomers dumping 900 billion, of their homes, or these 21 million boomers getting older and they're selling their homes. But a lot of the value, a lot of the equity, a lot of the opportunity is in these businesses that they own and operate. They own and operate the business, and they own the real estate. And so whether the opportunity is buying the real estate and leasing it back to them, whether the opportunity is buying the real estate and repurposing it and leasing it to someone else to maximize rent, I think people are watching the wrong thing. People are thinking in terms of single family homes, and that there's no scenario where we're going to get, every, person in their 70s, 80s to be just selling their home at the exact same time to try to capture that equity. We just did our last episode on how a lot of these boomers are losing the equity in their homes because they break a hip, they end up in a retirement center, and all the equity's gone. The part that people are not watching, they're not paying attention to, is a lot of the boomers own other real estate outside of their personal residence, and that's a lot of times in a business, and they own the real estate, and that's where the opportunity is.
Well, I'll say one. Sorry, I'm stepping on you, Trav. But one thing, because I don't want to forget, a lot of these boomers are also passing these businesses on to their children. But think about it: the children, yeah, maybe they take the reins, but they also a lot of times want to win. They want to harvest some of that, and that could be a sale leaseback. In other words, you buy the building that the business occupies, you lease it back to them, but you work the math so that you're getting a good deal. You have a good operating cap rate, and you've got some equity in there. And so that's a way for that next generation to recapitalize, but also hold on to the business.
Well, what's interesting is, I think you're wrong, Mitch. It's a very small percentage of this next generation actually continued on to that business. So as much as I love you and you have such great things to say, I remember a stat from it's like going back to like 2019, 2020. But like in 2019, it was something like 400. These numbers are not, don't quote me on this, but it was something like 490,000 small businesses were closing their doors. And it was like less than 10% of them had a succession plan, because a lot of the next generation, they don't actually want to do what mom and dad did. They watched them grind 50, 60 years. So there's all these businesses that are shutting down with actually like no succession plan. And that's where, like, I think Cody Sanchez and these folks that we know that are buying businesses, that's where they focus on the opportunity, because there's these multi-million-dollar, like I'm talking businesses that are doing millions in revenue that mom and dad just shut the door.
Yeah, we're like tons of value, repeat customers, brands, reputation, and they just literally shut it down.
It just happened in our town, Trav, with the Chinese restaurant. They literally had customers over 40 years. Just shut it down.
Yeah, and that's actually, the statistics are against you, man. You keep a restaurant open for 40 years. I mean, that's
I was like, oh man, what's so anyway, yeah.
Right. Well, and I also, kind of as a related but a side topic too, there are benefits to, if you're starting a business, think about owning real estate too. And I argue about this with my wife all the time, because we bought a commercial building that she runs our business out of, and we charge her maximum rent. And she's like, why are we charging me maximum rent? And I'm like, think about this, because rent is a business expense. It's because you have one LLC that holds the building, and then you have another LLC that is the business. And if the business rents from the LLC that owns the building, well, you're reducing your profit on the business, which reduces your taxable expense, and you're basically shifting that income into your building, which then you have a lot more leverage. You can if you're maximizing rents, you're maximizing the value, which creates more value, and then you can refinance the building and pull tax-free cash out of it via a refinance, or you can just take straight line depreciation against that income. So it's a more tax efficient vehicle to maximize your rent and pay yourself maximum rent. And Jen and I argue about that because she's like, well, we're charging me the maximum amount of rent. I'm like, it's really a tax strategy. And I think people oftentimes forget about that. So think about that.
But the opportunity isn't just in business. It's interesting because like when I started buying investment properties, I was buying from mom and pops that had adult children my age. And I remember thinking, why the hell? Like I'm in my 20s and like a lot of, I'm not now. Now I'm only in my early 30s. But, 20 years ago when I was in my early to mid 20s, I do remember thinking all these sellers had adult children my age. And they saw mom and dad being landlord and maintenance person, dealing with tenants, dealing with the property. They also didn't want the real estate. And several of these sellers actually have brick and mortar businesses and they own a ton of real estate. And I'm thinking like, this is wild. Like they're adult children. They don't want the business. And I'm not talking about business that's in the real estate. There were several of these sellers that own brick and mortar businesses and I was buying residential multifamily real estate from them. And the kids didn't want to have anything to do with the business and they wanted nothing to do with the real estate. And I'm thinking there is millions of dollars worth of real estate and businesses, but they just saw mom and dad grinding for 50 years and they want nothing to do with it. So whether it's business, whether it's real estate, there is opportunities. Just open your fucking eyes, buy some assets, and live a good life.
I don't know how much real estate Mitch and I have come across where the kids inherited like the mobile home park and they wanted nothing to do with it. They sold it at a fraction of the value because they don't want it. They saw you, like you said, dad collecting rent, it was a pain in the ass going out in the middle of the night.
They see a big paycheck coming.
Right. And Mitch and I are like, spoiled little brats. They don't want, like, someone's handing them a cash flowing mobile home park and they're like, nah, I'll just sell it, get the cash, move on.